Every great investment you've ever made started with the right connections. Connections to the world's most sought-after investment community, dedicated to improving business and society. You are part of this community. Welcome to iConnections Global Alternatives Conference. In 8 short months, managers and allocators who control a combined $60 trillion in assets have used our platform. But as you know, there's more to our story. Funds for Food was the largest capital introduction conference of 2020, facilitating over 3,000 meetings with the industry's most sophisticated investors, while also raising nearly $2 million supporting those in need during the pandemic. We followed this with Fund Women Week, the largest capital introductions conference in 100 Women in Finance's history. Initiatives like these are at the heart of iConnections' mission. In early 2022, we will combine the latest in virtual and in-person participation at the world-famous Fontainebleau Hotel Miami. You are part of this community because you are the people with the vision to improve society. Invest in progress. Welcome to the world of iConnections.
Hello everyone, I'm Ron Biscardi, the CEO of iConnections. I'd like to thank all of you for participating in this year's Global Alternatives Conference. This is our first year hosting this event, and of course, it's virtual. But we are looking forward to our first in-person Global Alts event, which will be held at the Fontainebleau Hotel in Miami Beach during Hedge Fund Week in January 2022. This event will feature world-class content prepared by the iConnections Investment Institute, followed by 2 days of one-on-one capital introduction meetings, which we project will number over 10,000. This event will be free for allocators and open to managers who are members of the iConnections platform. So if you're not already a member, please go to iConnections.io to learn more. Thank you for joining us, and stay safe and healthy.
Welcome to the iConnections Global Alternatives Virtual Conference. I'm Michelle Noyes, Head of Americas for the Alternative Investment Management Association, and I'm thrilled to introduce today's talk on Bitcoin and the digital economy. For the past 31 years, AMA has been the voice of the global alternatives industry, and we have been working with our hedge fund members as they continue to expand into new frontiers, including private markets and increasingly digital assets. AMA's Digital Asset Working Group is engaged in education, advocacy, and the publication of practical tools and guidance to support the institutionalization of this asset class. Conversations like the one you're about to hear between Michael Novogratz, founder, CEO, and chairman of Galaxy Digital, and Russel Barlow, global head of alternative investment strategies for Aberdeen Standard Investments, are essential to understanding what's behind the growth of crypto assets and what it means for all investors. Furthermore, I'm delighted to be addressing all of you on the iConnections platform. AMA is a proud partner of this Global Alternatives Conference, and while I've missed seeing all of you in person, I'm glad that iConnections has been able to bring us all together virtually at a time when knowledge and relationships have never been more important. Thank you, iConnections, and I'm now delighted to turn it over to Michael and Russell for their discussion on Bitcoin and the digital economy.
Hey, Mike, thank you very much for joining this fireside chat at this session today. It's great to meet you virtually over the VC. And we're kind of, just before we go get into the conversation, I would like to say you're looking extremely well for someone who manages assets within the fast-paced and volatile world of digital assets. How do you manage it?
You know, I was thinking last night. I priced up some Ethereum options, and they were 190 vol. And I realized in 30 years of trading, I'd never seen 190 vol. You know, I got close once when the Indonesian rupiah in the '97 crisis literally disintegrated. There was no currency left, and so it's not for the faint of heart right now. I think. When you have volatility like this, two things have happened. Either there's a complete structural shift, and I think that's part of what's going on, and there's a bit of a mania, which is also part of what's going on. And so we should expect corrections. We should expect at one point leverage longs get washed out. It looks like that's happening today in the Bitcoin space, right? Bitcoin's down 10%, which is a big move. That said, it's still up on the year, and we're only January 20th. And so it's not for the faint of heart right now. It means position sizes have to be smaller. It means patience has to be longer. You can't get, I gotta buy it, I gotta buy it. Markets always give you a chance. If there's one rule I would tell any investor, young, old, new, in bull markets, and we're in a bull market, buy pullbacks to the 20-day moving average. And so when things get way ahead of themselves, you don't have to FOMO in. You sit patiently, look at that 20-day moving average. 20-day moving average for people that aren't trading junkies is the average price of where you've been for 20 days, the previous 20 days. And so in a bull market, it will lag up, the chart. But you're going to get pullbacks. This is one today. I don't think it's a structural shift. I think the market just got, too bulled up, too much of a frenzy, too many stories. And so, I sold volatility. I was saying to someone recently, if it's not for the faint of heart, but 190 vol is unsustainable. It's unsustainable for lots of reasons, because people can't handle it psychologically. And so they just give up and get out of their positions. And you see volatility come down. You look at both Russell and me, we look like ex-vol traders. Try selling vol, you're going to lose your hair.
Yeah, that's a good point. But one other thing about your the area in which you operate, I mean, your trading markets 24 hours a day, 365 days a year. It can seem relentless.
It is
whilst
relentless.
You talk about the volatility and the moving day average, markets can move swiftly. How do you kind of cope and manage running a business, running funds and assets in a marketplace that doesn't stop? And by my reckoning, you've spent some 5 years in this space. That's kind of the equivalent of 20 years in my traditional asset world. So again, I imagine it can age you quite quickly.
I luckily, started trading, 25, 30 years ago. And there's a certain DNA to be a speculator, that the adrenaline, juice, sleeping with it used to be a clicker. Now it's a phone, and checking the prices at 3 a.m. You just get used to. I wouldn't recommend leverage positions for most people. I'd recommend, if you're a new Bitcoin or Ethereum investor, putting 2 to 4% of your net worth involved, putting a wide stop loss, and waking up December 31st of next year and seeing, shit, Bitcoin's at 65,000 and I bought it at 30. That's pretty good. Bitcoin's been the number one performing asset literally over a year, over 3 years, over 5 years, and over 10 years. And so last year, Tesla beat Bitcoin barely. But in terms of big asset classes, I don't see that changing. And so, listen, there's a whole culture of crypto maniacs that trade nonstop. It's really dangerous. You have to have, we've got deep pockets both in Galaxy, and I've done this for a while. And so you've got to be able to take drawdowns if you're going to trade leverage positions with big amounts. You have to have a discipline. You have to understand psychology of markets. And so for most people, I'd far rather than be investors. Investors hear a story, believe a story, put some capital in, have more capital to put in if it goes against them. I'm fundamentally convinced this is not a bubble. It was a bubble in 2017. I told people it was a bubble. I sold most of what I owned. It had all the markings of a speculative frenzy. This has the markings of the start of a real transformational revolution. Yes, we have tempest in a teapot bubbles. Right now, everyone gets excited. There's FOMO. But generally, bubbles happen when everyone is in. The institutions are just starting to get in. You read yesterday that BlackRock, biggest asset manager in the world, is now given permission for 2 funds to get in. That means they're not in yet, or they're in very small, right? And BlackRock, I think, is, 10 trillion under management or some bizarre amount. PIMCO's not in. Capital, I don't think, is in. Like, the biggest asset managers in the world aren't in yet. They will get in. Yeah.
So I think that there's definitely some key points that you've made there that I'd like us to explore during this conversation, if it's okay. And if it's okay with you, I mean, I hope that we can kind of go anywhere with the conversation. I imagine that you're used to lots of different questions at a number of different levels. I'm going to try and keep this fairly low key, but, probe where I think we should be probing, just to give everyone, yeah. So maybe just a good place to start is Bitcoin's best known crypto asset. Maybe it could just be a couple of seconds on a brief overview of its genesis and the changes that it's been through, because the Bitcoin we have today isn't exactly the same as the Bitcoin that was first created.
Sure.
So talk about some of the changes that's it's experienced as its rate of adoption has increased.
Sure, I think it's a great question. Listen, Bitcoin and all of crypto, crypto in lots of ways started with Satoshi's white paper, or the modern crypto movement, the way we see it. And it was a reaction to the financial crisis in 2008, when people lost trust in banks, they lost trust in governments, they lost trust in institutions. And so crypto at its core is a big, middle finger to the space. Satoshi, whoever she is, wrote this elegant paper explaining what she was doing in an elegant piece of code. And it was the first kind of decentralized money. And the original thought was crypto would be its own sovereignty, and it would be money in lots of ways, or it would at least have the capacity to be money. Well, money is a funny thing because there are two parts of it. We store our value in money, and we transact in money. And what's happened since is, for very good reasons, Bitcoin has moved to the store of value lane. People have bought the story that it's digital gold. You don't buy anything in gold. You haven't bought tennis shoes in gold. You haven't bought a house in gold. You haven't bought a beer in gold, right? You don't. You buy it in pounds if you're in the UK, or dollars if you're here. And so I think the same with Bitcoin. Bitcoin is now the new generation's digital gold. And it's not just the new generation. Now we've got baby boomers moving into it, right? So, but it has this lane of digital gold. It's got a market cap of $650–700 billion. Gold is 10 trillion. So we're 6.5% of gold market cap. I think we're going to go to 10 and 15 and 20. And at one point we'll be bigger than gold. Payments, right? And there are people that originally thought, Satoshi's vision was to be in payments. So if you listen to Roger Ver or Craig Wright or Calvin Ayre with Bitcoin Cash, Bitcoin SV, they really believed this was supposed to be a payment currency.
Yeah.
I never did, for a lot of reasons. I didn't think, and I still don't think, the dollar and the pound and the loonie in Canada will go to hell in a handbasket and become the Venezuelan, currency, or the Zimbabwe currency. The possibility of that happening is rising, but it's still not base case by any stretch, even with the monetary and fiscal policy we're seeing today. I also think if you say, I'm going to replace those currencies, you're going to have central bankers, politicians, Ministry of Finance officials, Treasury officials breathing down your neck and saying, oh God, no, you're not. That's our right to issue currency. And so, the counterculture side of people wants to throw the middle bird to governments. It's really difficult. Governments have law enforcement, guns, armies. They're not going to give up their right to have sovereign currency. And so, but they don't care about gold. Bitcoin should never have been called a cryptocurrency. If you call them crypto assets, it's much psychologically easier for everyone to deal with. What's really been happening is Satoshi created this amazing asset to store wealth in, that's taking market share from Tesla, from real estate, from gold, from every other equity, right? The $1 trillion of market cap in crypto would have gone somewhere else, right? It's being fueled by central banks that are just making more and more dollars, right? Four out of $5 that are in existence today didn't exist when Bitcoin was started 12 years ago. Let me repeat that. Yeah. $4 out of $5. And so this coffee cup by definition should be 5 times as valuable, Yeah. And so all assets are going up because we're putting more money in the system.
is there anything that you feel can start to challenge the dominance of Bitcoin in this way? So if we think about kind of other established, well-known sort of aspects of finance or even businesses, there is a dominance of a particular player until a disruptor or a new version comes along. Search endings, AOL,
in some
Yahoo,
ways,
Google.
For store of value, what's so cool about Bitcoin is it was brilliantly designed. There'll be 21 million Bitcoin issued ever, right? 18.6, I think, have been issued. A bunch have been lost. The rest get issued over a 60, 70-year period. And so we have a really defined population of the total asset. And it's hard to mine, right? There's a giant, it's expensive to mine, I should say, right? And so you want something worth $1 trillion defended by an expensive security perimeter. If it costs nothing to mine Bitcoin, it would really scare the shit out of me. But the fact that it's built this ecosystem. And so I don't think it's going to have a contender, right? Listen, these are valuable not because of their technology, right? It's not the Bitcoin code. We could fork the Bitcoin code and call it Novocoin or Russel coin, and it probably wouldn't be worth a whole lot. I might be able to make it worth something. I could get my small group of family to buy Novo coins and trade them back and forth. So you have these community coins, right? Litecoin has a vibrant community. I don't think it's going to grow. Now, it's not going to pull institutional people, and it's not going to have the infrastructure set. And I think of the periodic table of elements, right? There's 114 elements. Only gold is valuable just because. Only gold is a social construct. All the rest of the elements are valuable because we use them. And so Ethereum is going to be valuable, very valuable, because it's going to get used, right? It's going to have stable coins and DeFi built on top of it. Ethereum really is compute power. It's this decentralized, global computer network that's going to authenticate and process data and have the world built on top of it. It's going to be valued not like gold, but like Facebook. What's the network effect? How many people are building on it? And then I go to DeFi, right? If you look at things like Yearn or Sushi Swap or Uniswap, these really feel more like equities. These are driverless banks, driverless exchanges, but they pay dividends in essence. And so you're going to value them like you value an equity. What's the discounted cash flow of a giant growth stock? And so there are really three different buckets. I don't think any store of value will come close to challenging the dominance of Bitcoin. It has the brand.
You mentioned there a few things I wanted to ask you. So I love the terms and the language that's used in your area of finance. You're talking about forks, hash rates, nodes, noobs, whales, all of these things. And then you mentioned there a really kind of interesting element, which is the term DeFi, Decentralized Finance. And what I would really like, if you wouldn't mind, is maybe you could explain DeFi in a bit more detail, and really illustrate to us why we should be taking note of it right now. And I've got a few other questions on the back of it. So if we could just kind of, what's DeFi and why should we care?
Well, when we first got into this space, this was a revolution, and it was going to democratize finance. What do people mean by that? It meant, how are we going to bring access to financial products in a transparent and cheap way to the masses, right? Well, what DeFi really is taking a blockchain, which does that, right? A blockchain is a database that is not owned by anybody, but is shared by a community and is permanent and unchangeable, right? So that's what a blockchain is. How are we going to take that concept and bring it to traditional finance? And that's what DeFi is. It's taking a blockchain to finance. And so it becomes a peer-to-peer system of exchanging. So instead of going to the NASDAQ or the FTSE or the Hong Kong Stock Exchange, you can go to Uniswap, and me and you can trade directly with each other without the middleman taking his fee. So you're cutting out the rent seekers. You're making things more efficient, and you're making it transparent because every transaction gets hashed to a blockchain.
And I think that to probably a huge number of us at the conference today as allocators in the financial and players in the financial system, we're well aware of the inefficiencies that exist. So I'm sure that this concept of DeFi can resonate with all of us, irrespective of our views on particular currencies.
The hurdle for DeFi is compliance. And I think what's going to be so interesting in the next 24 months is building in compliance into the protocols, because peer-to-peer is a brilliant idea, right? But governments get really worried that you're going to send kiddie porn, or you're going to send money to North Korea, or you're going to send, and listen, they have a right to be worried. Like, we don't want people sending kiddie porn or stuff to North Korea. There's a fair question to be, how much of that is actually going on? Are we trying to, solve a problem that doesn't really exist on scale? But these are the things that are going to be explored in the next 2 years with regulators and developers of these programs. And so crypto is really interesting, and Galaxy's role in it, I more and more find interesting, right? We always said we were going to be a bridge between institutional investors and the crypto community. In some ways, I did this today on purpose. I'm wearing a coat, but not a coat and tie. The coat representing the institutional world, and the t-shirt or the hoodie representing the FU world. Like, we're outside the system and we're going to fight it, right? Think about what DeFi is. We're investing in DeFi knowing it's going to try to put us out of business.
Yeah.
Right? Yeah. DeFi is the biggest threat to JP Morgan, to BlackRock, to insurance companies, right? There's great insurance protocols. There's great interest rate protocols. There's great derivative protocols that are being built. Full disclosure, DeFi is still in a sandbox. It's an experiment. I would take venture money, venture mindset, and invest in DeFi. Where Bitcoin's a real asset. Bitcoin deserves to be on the screen next to gold, the S&P, treasuries, right? It's on that screen. DeFi is in your venture bucket, but it's fascinating. It's where all the intellectual juice is showing up right now.
I think it's a great illustration of perhaps in a number of years' time, the disruption that can come from wider adoption of DeFi. Have you seen, and where have you invested in any emerging kind of DeFi applications to date in Galaxy, and where have they been, and sort of has that experience proved to be?
Listen, the best way, and this is unfortunate for most people because they don't have access, the best way to invest in DeFi are really to find the brightest, new businesses, the brightest engineers and futurists, and get on and see their businesses early. And so we have a team that just does that. There's a lot of competition, right? There's a company called Parify that's good at it. We invested in them. There's Polychain, who are masters, and then there's Fred Ersham's company. My God, it just jumped out of my head. Who's one of the biggest in the whole space? Paragon.
Oh, yeah.
And so there's a lot of competition because these new inventors, these new entrepreneurs, they don't necessarily need your money. So you got to give them your money and ask you, so you're going to help them grow their business. We invested in a company called 1 Inch, which has already launched and, theoretically has made us a ton of money. And so we're looking constantly for those investments in the market that other people can buy in now, that once they go from idea to token, there's companies like SushiSwap, YFI, Compound. Those are like core infrastructure blocks of DeFi, that I think should be in a DeFi portfolio. So one of my friends called me and said, should I buy them now? I was like, listen, there's no easy place to buy them. They literally doubled in the last, 4 weeks. Some have tripled. And so again, draw the chart, look at the 20-day moving average, and buy them on the pullback to the 20-day moving average. But having some part of your portfolio in DeFi seems really smart, or investing in a DeFi fund. We're working on trying to create either a DeFi fund or a DeFi index, because it's really hard if you're not in the weeds of this stuff.
Yeah, I think that's a really great segue to where I wanted to go next as well, which is when you are looking at this space, I imagine diversifying across a number of different opportunities is a good way to sort of make sure that you're not carried out on one particular trade. And the great way, especially for myself, and I imagine other institutional allocators, is to select a fund that actually can take numerous positions. The one thing I've observed, though, is that it's a very different beast trying to analyze and select funds within your world than it is within the traditional space. And in some ways, it reminds me of sort of the hedge fund industry back in the 1990s, where unregulated and you really needed to understand the risks and the operational aspects to make sure that you knew what you were getting. But the opportunity set was attractive. Any advice you can give us as allocators to what to look for as a red flag when we're looking at funds in this space, but also linked to that, what should we be prepared to compromise on? Because you do need to think or maybe look for different characteristics in the talent and the organizations to take advantage of this particular space. So kind of the red and the green.
First of all, this is a beta business, right? We're so early on. And so for DeFi, DeFi, you look for the best talent around venture, and you think of it as 5-year or 8-year money. You don't think of it as my trading money, or I'm going to look at my quarterly returns. For a Bitcoin or Ethereum or a coin fund, it almost feels weird to pay 2 and 20 unless you really have someone with spectacular inside expertise, because beta is going to drive your returns. And so in a lot of ways, you want kind of beta plus, 1 in 10 beta plus, which is we're going to be long most of the time, but we're going to reserve the right to short expensive coins against cheap ones, to lower our total beta within a band. But you're not going to make a whole lot of money investing in a hedge fund in crypto if Bitcoin ends the year at 20,000 and Ethereum ends the year at 500, right? Because the bias of why you're investing is we think we're in a revolution. And so, it's threading this needle between getting your exposure to the space and having somebody that's an insight or that knows enough that, okay, this has gotten stupid. I'm not going to spend 190 on options, 190 vol on options. That's just inanity. As a matter of fact, I'm going to sell it. Maybe I'll do a covered call strategy, but I'm going to continue to keep beta to the market because that's why you asked me to invest your money.
Yeah, and then maybe linked to that, then you mentioned there options, the development of the options and futures market within the kind of the crypto asset space. How's that evolved, and how does that kind of play to your strengths, maybe your background there as a global macro trader? And maybe there are some RV trades out there that are super attractive that are now kind of more, there are parallels.
The market has exploded in the last 6 months. 6 months ago, we're a big player in it. We're probably a top 3 OTC player. A lot gets done on an unregulated offshore exchange called Deribit. And that's where most of the retail options trading happens. Listen, whenever you have retail fly into a market, and this is going to sound arrogant, and I don't mean to, there's not the same education in options trading. Vega, Gamma, Delta. I mean, simple things that you learn on the derivative desk at Deutsche Bank or Goldman Sachs or Morgan Stanley, most retail guys don't figure out. And so there are grand opportunities in selling volatility. It's a hard game in skew, in all kinds of volatility strategies that, again, aren't recommended for your average investor, but finding groups of people. I mean, we do it on our balance sheet. So Galaxy Stock is an interesting way to participate in that. There are other arbitrage-alike funds that can take advantage of it. Not a lot, they're small, but they're amazing opportunities because you've got this whole world of just buying crazy options without thinking about them in volatility terms. I remember, it reminds me when I first went to Tokyo, I was at Goldman Sachs and I was a salesman, and the Japanese institutional community didn't really have experience with options. And so insurance companies would participate because they'd use selling puts as a way to buy. They called it target buying. And so I would literally sell options to the Japanese in terms of premium. And I'd take the other side and have US hedge funds buy in terms of volatility, and it was just a beautiful business for Goldman. We were just raking in money because the spread between the two was so wide because they were looking at different things. We're in a similar situation now with retail frenzied buying options on Deribit, which translates into the same thing, quite frankly, in the equity markets with all the new Robinhood, option buyers. There's crazy skews that don't make any sense that you can take advantage of.
Okay, that's good. And then kind of maybe linked to some of that, we can talk about liquidity, but 3 areas I wanted to make sure that we covered were pricing and valuation, liquidity and regulation. I don't think we can talk about this space without touching on those points. So maybe taking the first of those, pricing and valuations, could you maybe contrast valuation today relative to how it was back in sort of the mid 2017s? Especially when you're running a fund, there isn't a closing price to mark things at. How's it evolved, and how do you deal with it?
So we actually, from a valuation, we have a joint venture with Bloomberg. We have the Bloomberg Galaxy Crypto Index. We have the Bloomberg Bitcoin Index. So the Bloomberg Bitcoin Index takes an average price at a certain time on registered exchanges, regulated exchanges, and declares it a price each day. So our Bitcoin fund is actually priced by Bloomberg. And so it's arm's length, it's done in a real process, and it gives you a fair price for the day. Listen, there's a tremendous amount of liquidity now in the space. We on some weekends will trade $2.5 billion of assets, of crypto assets. And so we're tens of billions of dollars trading in Bitcoin around the world. And so there's plenty of liquidity. We still get these huge gaps. We're down 10% today. Well, how can I say there's plenty of liquidity and you fall 10% on a major asset? You have to remember Bitcoin started as a fully retail asset. There's still a huge retail component to it. In Asia, the exchanges that have the most volume, BitMEX, Wobi, Binance, Bitfinex, unregulated for the most part, and they provide their customers amazing amounts of leverage, up to 100-to-1 leverage. Think about that. I'm a rich guy. When I want to buy, Amazon stock through Goldman Sachs, they'll give me 2-to-1 leverage. I'm like, 2-to-1 leverage? That's it. If you have a hedge fund, it's better, but if you're just a family office, 2-to-1 leverage. If you want to short, you get 0 leverage. You actually get negative leverage. I'm like, I want to short Tesla stock. Okay, for every $10 you want to short, you got to put $13 of margin up. In crypto, 100-to-1 leverage, long or short. And so what do you see? The Asian crypto exchanges really are wonderful second generation, not exchanges, but casinos. Right? They're a place that are allowing people to take very speculative bets. And if you've ever lived in Asia, there is a gambling culture that makes Las Vegas look like a sleepy town. And that exists in China and in Hong Kong and in Korea and in Tokyo and in Taiwan. And so a ton of volume and volatility is created by this leverage. That's slowly being replaced as institutions buy. Right? Institutions aren't buying this leverage. At most, they're buying futures in Chicago where you still have to put up, 60 cents on the dollar. And so we're seeing this transition from the retail leverage player to the non-leverage player. And over time, that will make volatility come down. Right now, it's not. And so,
just on the, I think the point there around speculators being a large part of the market, that ties back to your point around opportunity for kind of more institutional sophisticated allocators to be or investors to be able to trade that speculative moves. When you mention though that institutional investors can access the market, there is liquidity. Institutional allocators do write really big tickets. Realistically, is there sufficient liquidity to see the likes of the large institutional groups really be able to have not a large allocation, but start to build positions here without moving the market?
Yeah, listen, I could buy you $200 million of Bitcoin today in this volatility, you wouldn't notice it. And so, listen, billions is a different story. If you're going to come in and buy billions, I wouldn't recommend it doing in one day. But Michael Saylor bought his $600 million over 2 days without really moving the market. And so there's plenty of liquidity for bigger guys to get in. That wasn't true a year ago. I couldn't call Ray Dalio and say, Ray, you got to get into Bitcoin. He'd be like, wait a minute, my fund is bigger than the market cap. I mean, it wasn't, but but now you got a $600 billion market cap that trades monster volume. And so, and we're seeing $250 million, new players enter the market. You'd be surprised how many people I know with over $500 million worth of Bitcoin that didn't own any Bitcoin 6 months ago.
Okay.
And so those are mostly hedge funds, but now we've got insurance companies moving in, and you had, one big UK asset manager who publicly announced, right, Russel, that they had bought 560 million worth.
Yeah. And then obviously that Blackstone news that you quoted earlier on is kind of a big event too for institutional allocators getting into space. So the last area that we can't not cover is regulation. Obviously, the news around Ripple's enforcement notice at the end of last year probably sent a bit of a shockwave through your industry. But as a traditional allocator looking at it, I was probably a number of them glad they didn't have exposure to explain it to their CIOs or their boards. But kind of moving away from that, it feels like the announcement of the new chair of the SEC, Jerry Gensler, is a kind of a big event for kind of digital assets in that space.
Well, listen, so full disclosure, I worked with Gary in Hong Kong with Goldman Sachs. I consider him a friend. I taught one of his classes in blockchain at MIT as a guest lecturer, or I did guest videos since it was all Zoom, and know him well. He is fair. He is smart as heck. He understands crypto as well as I do, or maybe as well as I do. I think, he's already spoken, in the past that Bitcoin and Ether were not securities offerings. And so they kind of get a safe pass from him. He's in the past said the way Ripple was launched, he thought it was a securities offering. And that's what the SEC came after Ripple for, XRP. And so I don't think he's going to be too kind to them. We'll see. We'll see. There are a bunch of other coins that were launched in and around 2017 that are probably nervous that they might have to deal with the SEC. Now, listen, I think you saw Block 1 settled with the SEC. I think most of those protocols, it will mostly be a negotiation and a settlement if they did indeed break some rules. I think what got Ripple really in trouble with the SEC was the fact that their top two guys were selling coins for themselves, not disclosing it, and selling them to the unsuspecting public. It would be like me selling Galaxy stock and not telling anybody about it, and then being out and saying, "Oh, what do you mean?" That just is kind of a no-no. It's a no-no intuitively. It's a no-no ethically, and that's why I think the SEC is going to come down hardest on them. The bright news is when you have a really smart guy that understands the space, you probably get really smart regulation. And we're not going to live in a world with no regulation. And so if we get smart regulation and the rules are set, it actually brings capital into the space.
Yeah, and I think that it's easy to maybe just try to think of things as a binary outcome. So does he stand for kind of the democratization of financial assets, or is he there to uphold and prevent unscrupulous behavior and exploitation? But actually, you could probably marry the two of those things perfectly well together.
The SEC's role is to protect the little investor. And quite frankly, I think they've done a crap job of it in the last administration. You even think about the biggest owner of Bitcoin in the world is the Grayscale Trust, right? It's a closed-end fund run by Digital Currency Group, Barry Silbert's group. It is a brilliant piece of business. They have $25 billion worth of Bitcoin. They charge 2% annual fee, plus they make money on the way trading in. Most of that money comes from people putting Bitcoin in their fund, so borrowing Bitcoin, putting it in their fund, seasoning it for 6 months, and then getting shares of the trust. So if you want to think about it, it's hedge funds arbitraging retail. That's what it is. There's no other way to think about it. Like, so you're the SEC, you would not let an ETF through, but you let this project through where retail's getting the short end of the stick. Makes absolutely no stinking sense. I cannot believe Gary Gensler will let that go on for that much longer. What I think he'll do, and I'm not going to say, listen, Grayscale hasn't done anything wrong. They were smart to thread that needle, and they built an amazing business, right? That's going to last for a long time. I'm jealous of that business. But what I think is going to happen is the SEC is going to allow an ETF, which is better for retail. The ETF is going to drag all the new liquidity, and that premium on the Grayscale Trust is going to collapse. It's okay. Listen, Bitcoin will probably still be higher. The investors will still make money. They would have made less than that. They just bought Bitcoin, but I don't think it's the end of the world. But that's what's going to happen, I think, within the next.
In terms of why there isn't currently an ETF, is it a technical issue, or is it really, what's behind the fact that there hasn't been an ETF?
It was partly technical, that they were worried about having a good enough thing to price on. Right now, you've got huge volume on the CME futures, and so there's your pricing fix. But it was mostly, I think, emotional. Chairman Clayton didn't want crypto to be part of his legacy, and I think if there was no crypto, he'd been happier. Right? He was focused on other things. He actually accomplished some very good things, but not in the crypto space. And so I think he just didn't want to deal with it.
Right. Okay, so we're coming towards the end of the session here. There are a few kind of quick fire questions, if you don't mind. One around, can't really talk about the financial ecosystem at the moment without mentioning ESG. Mining, obviously energy intensive, probably nowhere near as energy intensive as mining physical gold. Do you have a comment or a view on the carbon footprint from crypto mining?
Yeah, listen, I think crypto is going to use a lot of electricity, and it's going to use more and more electricity. That's just a fact. You want a secure system that's safeguarding all these assets. You're seeing more and more crypto miners move to places where there's the cheapest power, and the cheapest power often is coming in places with less of a carbon footprint, because you've got, and so we're seeing wind in Texas, we're seeing, thermal in Iceland. And so you're going to drive, I think, a lot of crypto mining into ESG-led electricity places. It also, because you don't need the consistency of power, it does well in places like wind. You can, power up and power off your mining really easily. And so it's not a perfect answer. The industry knows ESG is moving it that way, and it's moving that way itself. And so I think you're going to have less and less coal-fired, electricity powering crypto mines in the next 5 years, as we're going to have less and less coal-fired mines.
Yeah. And then one other point that you mentioned earlier was around the history behind the adoption of the blockchain. Do you see that there's some kind of battleground coming in the future around the early crypto founders reconciling that kind of dichotomy between what they saw as the founding principles of blockchain, the decentralization, not reliant on governments and central banks, and then kind of institutional investors coming in?
That battle happened in 2017, and the Bitcoin core community, what we think of as Bitcoin today, won, and the two forks, Bitcoin Cash, which then forked again into Bitcoin SV, lost. And in market cap and in use cases and in network, they're just not even in the same category. I was talking to one of the leading proponents of one of those two, And I was like, dude, just change your name to Fast Cash or something, because, what pisses the community off is that confusion. Bitcoin Cash and Bitcoin sound like the same thing. And actually the guy who is the proponent of Bitcoin Cash owns the Bitcoin.com website. And so if you go to Bitcoin.com, it actually brings you to the Bitcoin Cash ecosystem. And that literally has infuriated the community, which is a shame because, Roger Ver, he was really one of the guys that helped birth Bitcoin. He had a change of heart. I don't think he's manipulative. I think he fundamentally believes that Bitcoin Cash should have been the winner. He recognizes it wasn't, but he still thinks it's an important ecosystem. I once put a picture of myself and him on, because he's a lovely guy. He is smart. He is nice on Twitter, and I got death threats almost. I mean, people really are angry at that guy. But it's a lot of that because of the confusion. That battle's been lost. And you saw today there was a lawsuit. Okay. Craig Wright suing people for this is grandiosity. It's grandstanding. And so I think, not even worth the discussion.
Okay. All right, great. Now we're out of time, Mike. So I just want to thank you very much for the opportunity to engage with you, ask you these questions on the chat today. So yeah, thank you very much for your time. Really enjoyed it. And I hope those listening in also enjoyed hearing Mike's thoughts on what is an interesting and disruptive part of our industry.
Great stuff. Thanks, guys.
Mike, if you don't mind, I had a couple of other questions. I don't know if they want to add them to it, but there's only one really that I wouldn't mind just hearing your thought of an answer on. What would be, can you quantify the impact of what a successful hack would have on Bitcoin to the kind of cryptocurrency industry? I know that it's like almost touted as being unhackable, but if it did, what would be the fallout from it?
So you could hack, if Coinbase got hacked.
Yes, right? But not that, but actually the fundamental kind of programming within Bitcoin, somebody was able to create and sort of siphon off.
I think it would be devastating. I think the probability of that is almost zero, but it would be devastating. But then if Coinbase got hacked, it would also be a big kick in the nuts, but not the end of the world. But you'd have a big, I mean, prices would fall from 31,000 to 20,000 in a heartbeat if Coinbase got hacked.
But if Bitcoin did get hacked and it was quickly kind of rectified, what I'm trying to get a parallel for is robberies happen in the kind of the non-digital world, and that doesn't stop people from mining gold, storing gold.
There's something magical about, it would almost be like if I could create fake gold, and then if people start worrying about gold not being real gold,
it undermines the fundamental kind of belief
about Bitcoin. Is it's this brilliant piece of tech that's unhackable. I mean, I once had one of the smart 16-year-old wonder kids, Charlie Noyes, he was 16 or 17 at the time, explained to me how much energy you would need and how much computing power to actually crack the Bitcoin code, and it was like galaxies worth. And
hence the name.
But yes,
hence your name. And then there was often quoted a statistic that less than sort of 5% of all wallets account for about 85% of the mined Bitcoin. Do you support that? And that was a couple of years ago. So if it was true, I imagine that concentration's got even greater with more retail wallets and miners taking kind of the majority of the own Bitcoin.
If you look at asset distribution in America, right? Wealth distribution in America, the top 1% owns more than the bottom 60. And I'm guessing within Bitcoin, maybe it's not that bad, but there's a concentration of wealth. It's not the same rich people, right? You look like a guy like Roger Ver, who started mining Bitcoin when it was $1. There's some old school whales that have lots and lots of net worth quietly in crypto. But I think there's still a bigger concentration of wealth than the egalitarian idea of, this new currency would have you.
Right. And I suppose the other thing there is when you think about who does own it, their role isn't to do and support and maintain price stability in the same way as maybe governments owning gold can help maintain stability by holding back supply. if they wanted to, they
Well,
could
listen,
monitor.
there's a, it's interesting. There are a lot of free riders in the space. So one of the things that's cool about the space is because people all own the same asset, you have a responsibility, if you would, to make the community better. So my responsibility is I'm a storyteller. So I'm freaking always telling stories of encouraging people to understand it, right? If you talk to Alex Marcos, who's one of the great Bitcoin guys, he's a coder. And so he funds and runs a core development team that is constantly almost like the keepers of the flame, making sure the code's up to snuff, that there are little changes that might have to change. And literally spend hours and hours and hours and hours and tons of money, often to do nothing, but in essence, monitoring the thing, right? Trying to make tiny changes. And I once thought, man, that was like philanthropic. And he was like, what do you mean philanthropic? I own a lot of Bitcoin. This is my way of making sure it's a better community.
Right.
And so everybody has an incentive to make sure it's a better community. It's a better ecosystem. Now, plenty of free riders, they buy it, they don't say a damn thing, And I'm always like, I should put a tip jar. Hey, give me tips for all the work I'm doing for the community. And I'll take the tips and give them to the core developers who are completely, at least I get like some notoriety and people say nice things to me on the street. Those core developers, they toil in complete anonymity. No one even pats them on the back. But this whole ecosystem works. And it's kind of one of the beauties of crypto, right? These are communities that take care of, there's not a CEO of Bitcoin. One of the reasons it's such a powerful thing is this little girl in the hot tub asked me to explain it. Her dad did. I was out skiing. And I said, most companies have one CEO who tells the story. I'm one of 25 guys that go on CNBC. There's Anthony Pompilio. And then there's guys in Japan and guys in Korea doing the same thing. And then there's people in little villages, right? The Bitcoin story is being told in every village in the world right now by somebody. There are 120 million people that own a piece of a Bitcoin, right? That's the most widely distributed asset ever, right? There are not that many Tesla maniacs, right? If you look at how many people own Tesla shares, a heck of a lot less than 120 million. And so it's a really unique ecosystem, but you do well by doing good. There are plenty of free riders.
I like the idea of the crypto asset police, or the underground kind of community that keeps things ticking along. That's great. Look, I've taken up far too much of your time, Mike. Thanks ever so much for the chat there and this little kind of conversation afterwards. Really enjoyed it. Thank you.